The retail sales data came in better than expected this week and took the Australian dollar to the highs around 76.50. However, throughout the week, the Aussie dollar fell and indeed hit 6-month lows as any hopes of a consumer recovery were doused throughout the week. This week, we saw two key domestic events. The first was the RBA meeting on Tuesday. That was followed by GDP. So the RBA regards the Aussie dollar was probably the biggest change in their statement. Here, they reiterated their warnings that an appreciating Australian dollar could slow the economy and inflation more than forecast. However, they then sort of stated more comfort with the Aussie dollar, merely noting it has been in the range it has been over the last 2 years. The RBA's next meeting isn't until February. Here, they'll update their forecasts. But the market is increasingly coming around to the Westpac view of rates being unchanged next year, and markets are only priced for around 50% of a rate hike throughout 2018. This was followed by Q3 GDP data. Here we saw a reasonable 0.6% for the quarter, or 2.8% growth for the year. However, the current economic expansion is mixed and a little bit uneven. The main surprise in the data was a 0.1% expansion for consumer spending, with weakness in both consumption of goods and services. This is the weakest we've seen consumer spending back to 2008 in the depths of the GFC. Households continued to be constrained by weak wages growth and actually slightly increased their savings rate this quarter to reflect that caution. Perhaps another indicator of household caution was the 4.8% decline in renovation expenditure. Next week, domestically, we see important updates on consumer and business confidence. These will be particularly important in the context of the consumer weakness we spoke about and the divergence between stronger business confidence and weaker consumer confidence. We also see Australian employment data, which has been surprisingly strong of late. However, the biggest event next week will be the US Federal Reserve's meeting for December. Here, they are widely expected to hike rates 25 basis points and continue their tightening cycle we've seen, making it the third tightening for 2017. This will be Chair Yellen's last press conference. Here, the Fed will deliver updated projections and forecasts for 2018 and 19. Really key for the markets will be what are the Fed's expectations for their Fed funds rate through 2018. So the US dollar could see more upside as we move through the Federal Reserve meeting next week. As well as progress on US tax reform, this could see the US dollar push broadly higher and could see the Australian dollar weaken below 75 cents next week. We'll be back to talk to you next week.